The Australian Financial Review.
Hello, I'm James Thompson, Senior Chanticleer columnist at the AFR. Welcome to our weekly news breakdown of all things business, finance and markets. With me today, as always, is my Chanticleer colleague. I'm pleased to say the Chanticleer coalition remains as strong as ever. It's Anthony McDonald. How are you, Anthony?
Yeah, no breaking up over supermarkets or nuclear here, James.
Absolutely. Well, this week we explain why Andrew Forrest says we should be worried about Australia's mighty iron ore industry. We ask what comes next after the RBA's latest interest rate cut and take you inside the spicy battle over one of our busiest airports.
James, this week you went west, young man, for the AFR's third annual mining summit in Perth. Top billing went to Andrew Twiggy Forrest, who came to the event with a pretty pointed message for his colleagues and rivals about the future of the mighty Pilbara region. James, what's he so worried about?
Well, what he's so worried about, Anthony, is China, basically.
Yeah.
But not because China's suddenly going to stop buying our iron ore. Forrest's point is that China's going green, and they're going green at a rate that we don't really understand. For 2 centuries, steel has been produced in basically the same way.
Yep.
You get coal, as Twiggy likes to say, old bits of timber and stuff, and you mix it with iron ore, and out comes the steel, right? The burning of the coal is quite carbon intensive. It's a dirty process. It's very effective. It's worked for a long time, but China is trying to clean up its skies. It's trying to clean up its cities, and they're moving away from blast furnaces, that old technology, to what's called electric arc furnaces, which is a much lower carbon emitting technology. Problem is, Australia's iron ore isn't that great for going in these electric arc furnaces. It needs a bit of technology applied to it to make it work. Everybody's working on that. Rio Tinto, Fortescue, BHP, they're all trying to make sure that the iron ore that we produce out of the Pilbara is ready for these new electric arc furnaces. But Forrest says, look, well, this is a pretty urgent matter. The Chinese are deciding right now whether they're going to design their steel industry with these new furnaces around Australian ore or Brazilian ore or African ore. And his point is, hey, we're not as, at the moment, they love our stuff, but that might not be the case forever. Now, Anthony's talking his own book a bit here, shock horror, because Fortescue wants to move from producing iron ore to what's called green iron. It's basically when you use green energy, hydrogen or solar or whatever it is, to further refine the iron ore, strip out more of the impurities, and you end up with this very pure form of iron that you can then send to these new electric arc furnaces. So Twiggy and his team, they're working away on that, trying to get it right. But his point is, that's where Australia needs to go. And if we don't go there, then it might be that the Chinese suddenly start to go, hang on, no, we're not as interested in that stuff coming out of the Pilbara as we were before. So it's an interesting one. We also had at the mining summit Rio Tinto's Simon Trott. He's their iron ore boss, and he's like, yes, Twiggy's right, this is an issue, but it's going to be an issue that plays out over decades. We've got a long time to fix this. We've always come up with a solution in the Pilbara. We've had 30 great years, amazing years of iron ore production, and you go over to Perth, Anthony, and you realise just like the riches from the iron ore industry. It's a beautiful looking town. It's clean. I mean, the city's gleaming. And you just realise, we got it pretty good thanks to the Pilbara.
Thanks to 1 billion tonnes of Australian dirt a year, James, that goes to China. It's amazing.
That's it. But there's no guarantees in life, and I think that's what Forrest's trying to say. So, look, it was a provocative start to the summit. He's the first guy up on stage, and he basically, it's a bit of the turd in the punch bowl. It got everyone thinking and got everyone talking, and I think that's what you want at a summit. So it was a great way to start, I must say.
So just quickly, did everyone get in behind Andrew Forrest on that call, or was there a bit of scepticism from not just Simon Trott, but more broadly?
Look, I think people are saying directionally he's right. There is this change going on in China. They are trying to go green. It's an undeniable trend. And yes, our iron ore isn't perfect for these new electric arc furnaces. I think where everyone else is a bit more relaxed is, this is going to be a process that takes decades probably. And so we've got time to make this transition, and it is a transition, and we can do it with a bit of ingenuity. So Look, I mean, I don't think it's panic stations, but I think Forrest was putting in a marker in the ground to say, this is something we need to think about, and it's more urgent than you realise. So good on him. Anthony, we also had the Federal Resources Minister, Madeleine King, at the summit, talking about all sorts of things, including the Critical Minerals Reserve, which is a big topic of interest over in Perth. But of course, she was asked about the big political news of the week, which was the split between the National Party and the Liberals. I think that happened on Tuesday. By Thursday, it looked like the split was in reverse and the lovers' tiff was over. What have you made of this? Well, what a mess.
It is a mess. I mean, there's a lot of this makes sense going around, isn't there, James? And maybe it does. I think that's just what happens when your backside gets handed to you so comprehensively. In an election, you've got new leadership on the Lib side. You're staring at another 3, 6, 9 years in opposition.
Yeah.
Maybe you have to burn down the house to build it up again.
Okay.
Perhaps, James, both parties will go away and find what they really believe in. Perhaps, like you say, they make sense of it and get together again. But in the near term, I'm not sure it really makes too much of a difference to Australian Parliament, the way it works, the way it's going to operate, James, because let's be honest, I think both sides will still consider themselves opposition to Labor. They're not poles apart on a lot of issues. There are a few key issues that they are materially apart on, and that's part of what's driving the split. But they've got a common enemy, James, or enemies, and that's Labor, the Greens, the Teals. And if there's one thing I know, it's that nothing unites like a common enemy. So so long as they have common enemies, I reckon they'll be friends. But James, what did Madeleine King have to say about it?
She said something really interesting, Anthony, and I think there's a bit of internal messaging and some external messaging. Her point, and she made this a couple of times, is that Labor is now the party of the centre. And so you've got the coalition sort of splintering away to the right, to that Trumpian right. And King was trying to position Labor as more straight up and down the middle. You know what you're going to get with us. We're not leaning either way. We're just doing the right thing for the country. So there's a bit of messaging and positioning in there. But I think it's interesting that perhaps there's a bit of an internal message too, particularly in WA, trying to say to unions, look, we're not going to be swinging to the left here, even though we've had a thumping win. We are still going to be trying to stick to the middle. We're still going to be trying to, not go down either the polarized paths that other politicians have taken in other jurisdictions. I thought that was interesting. And it comes back to that idea that Susan Lee, the Liberal leader, that's probably her best chance of winning people back by sticking to the middle. Make it clear that some of those more extreme policies that were floated during the election by the coalition, that's not us anymore. We're the sensible centre type thing. I mean, you haven't heard a lot about the centre. The last person who was talking about the centre was, I reckon, Matt Common on our podcast, Anthony, when he came on and talked about, finding the sensible centre. Could this be the sensible centre being found?
I'm a bit wary, James. Just because you romp home in an election, I'm not sure that means you found the sensible centre. I mean, this one absolutely fell in Labor's lap. When we heard the ministers talking at our summits leading into this, we had the health minister, we had the employment minister, James. They were still very much on the workers' side of the bosses, on the patients' side of the healthcare companies. I think they are still on that left side of the debate. And just because they got the most votes in the election, I'm not sure that necessarily means they own the centre ground so much as that the Liberals just absolutely stuffed it.
I take your point. A bit of scepticism around politicians is reasonable. The one thing I'd say is, hey, at least they're talking about the centre all of a sudden. That I reckon that is a step forward. So let's see where it goes.
Okay, James, let's move to our first big topic of the week. And on Tuesday, Reserve Bank Governor Michelle Bullock delivered for borrowers when she announced Australia's official cash rate would fall from 4.1% to 3.85%. James, this was hardly a surprise. Every economist and their dog had predicted it. But Bullock did give us a sense of how much the RBA board agonised over the decision. James, the RBA has got the same problem as every investor, business leader and politician in the world. They've got no idea what Donald Trump is going to do next.
Totally. I mean, I think it was Shane Wright from the Sydney Morning Herald who stood up in the press conference and pointed out to Michelle Bullock that in the statement of monetary policy that accompanied the decision, the word uncertain or a version of it was used 134 times.
Yeah, is that all?
Which is a great bit of control F, for searching the document. I love that. But I mean, This was a RBA decision that literally came in that statement of monetary policy with three scenarios. You know, there was the sort of base case, which is that we get a modest decline in global growth that helps put downward pressure on Australian GDP growth and inflation. There was a trade war scenario, and that one whacks growth pretty hard and causes more deflation as sort of trade ructions flow through. And then there was a trade peace scenario, which sounds good for growth, but also could reignite inflation concerns. So, I mean, poor old Michelle Bullock, uncertain's fair enough, because who knows where this is going. I think, you know, she's right to sort of say, yes, we feel confident in making this cut at this time. They did look at a 50 basis point rate cut. So, you know, they were thinking about whether the economy could use some more help. But, you know, I'm not really sure where we go next. I think that's a reasonable place to stand, isn't it? I mean, what I'm interested in, Anthony, though, is does this, if you're an ASX investor, does this help you? I mean, usually rate cuts are generally pretty good for company earnings. Inflation's coming down. The rate cuts help stimulate a bit of growth. But if what Bullock is telling us here is that the reason we're bringing down rates is because we're worried about the growth outlook, maybe that's not so good.
Look at you, a resident bear. As a general rule, look, rate cuts are good for investors. You just said it there yourself. 1 in 3 Australian households has a mortgage. A rate cut helps them, takes a bit of pressure off. That's good for retailers, good for the supermarkets, good for the consumer exposed part of the ASX. On the other side of it, James, there's plenty of Australians that are sitting on net cash, you know, with their term deposits. The rate hikes have been really good for them. They're making bucket loads more than they used to on their savings. So congratulations to them. But it's generally accepted, though, that net cash crew, I mean, that they should be sweet either way, right? They're sitting on cash. So we focus more on the borrowers, the ones that have been a bit squeezed. But to your point, James, the RBA, they only cut rates for a reason, don't they? And that reason's usually to give the economy a bit of a kick along. The cash rate has been in restrictive territory. You know, it has been purposefully designed to be a bit of a handbrake on the economy. These 2 cuts in the past 3 months, they must have it moving closer to neutral. I think the fact it was still in that restrictive territory, James, is why the RBA felt it could cut.
Yep.
Inflation's back within target. There's no sign it's about to take off again. The handbrake's still on, so why not just ease the handbrake a little bit? You mentioned the quarterly statement on monetary policy there, James. I mean, fantastic document for anyone that's got a spare hour to read about the economy. But if you go straight to the forecast, I mean, they're saying GDP growth 2.1% for this year, 2.2% for next year. That's not bad. It's not the 3% plus that we were accustomed to for decades there, but I mean, it hasn't stopped. To your question, I mean, does that mean there's earnings growth out there? I mean, at the aggregate level, James, for the ASX 200, and if you believe it's earnings that drive the share market, and over the long term, it should be. The aggregate level, it all comes down to commodity prices, and particularly iron ore. I mean, that's what bosses around that aggregate number for the ASX 200. But if you go beneath that and just look at industrials, like the big Australian companies that serve most Australians, with the economy growing at 2.2% a year, rates coming down, you know, think of Woolworths, Coles, Telstra, Qantas, they should be better off. Their earnings should go up.
Hang on, Anthony. Helpful's all right, but stocks are within 2% of their all-time highs. We don't need earnings growth to be helpful. We need it to be as good as it's ever been. Like, does that backdrop really scream welcome to the golden age?
I'm not saying the share market's not overvalued. I'm just saying it's helpful for earnings.
Yeah, fair enough.
Which I think it is. And in the forecast as well, James, the RBA said they expect the cash rate to be 3.4% at the end of the year. Now, 3.4%, that's 2 more cuts from here. So they're saying it's headed south.
So do you reckon we can bank that in, Anthony? Is that where you think the RBA goes next? We get 2 more cuts before the end of the year?
Well, I think Michelle Bullock stressed it was pretty uncertain. You said it, James, that 100 plus mentions in the statement on monetary policy. Forecasting's always hard. She said in the press conference, it's even harder now than it is normally. So I don't think there's a lot of conviction in regards to their outlook this time, James. The one thing that stuck in my head, though, and I think she was incredibly deliberate about this, she said, look, her job basically comes down to the balance between inflation and interest rates. And she said interest rates, they hurt borrowers. They don't like hurting borrowers, but they do hurt borrowers, you know, and about 1 in 3 households has a mortgage. But inflation, she said, that hurts everyone. And that's why you have to raise rates. You have to hurt the borrowers in order to protect everyone that's hit by the price rises on the inflation. But I think directionally, it doesn't feel like we've finished cutting. I mean, it feels like the next move's down, not up, I'd say. But I'm still not seeing the urgent move to slash and burn the cash rate. What about yourself?
Well, we're famous on the Chanticleer podcast for our interest rate projections, which translated means we got lucky once. I reckon we got one more cut this year.
Yeah.
I think Bullock's and the RBA more broadly has fought really hard to get inflation back under control. Yes, we're probably closer to neutral rate settings at the moment, but the employment sector, the labour market's still pretty tight, still pretty hot. Yeah, I don't see that there's any great rush here. The RBA's played this really well. Got a few cuts in, dodged any concern about cutting during the election. They've made sure they've given themselves some wriggle room around the Donald. Well done to Michelle Bullock, well played, and I think she'll maintain that wriggle room for a little bit longer.
Yeah, James, we've got even more uncertainty from the US this week when Moody's, the rating agency, announced it had stripped America of its final AAA credit rating. Can you explain to us, what the hell does this mean? Why does it matter?
What Moody's decision to take away America's last AAA credit rating really means is America's got too much debt. We knew that before Moody's told us last Friday. We knew it years ago, and we'll keep knowing it for a long time. So nothing new there. But what we are seeing is this renewed concern about the debt level. Successive US governments of both persuasions have just failed to tackle this. And in fact, the Biden administration, they were spending like drunken sailors.
Yeah.
They increased government spending 50% from 2000, particularly as they came out of the pandemic. But they kept that sort of wartime-like spending going, even when we're out of the pandemic. And that's just inflated the US budget position, as we've been talking about over the past few weeks. Moody's saying enough's enough. And you've got to think about the sort of backdrop here. We've got the Trump tariffs have been sort of wound back. They were supposed to help reduce the deficit by raising revenue. Now Trump's trying to force through his big, beautiful bill of tax cuts and spending measures. That's going to add another $3 trillion to the deficit. So what Moody's is saying is we're on the wrong path here. Not only are we on the wrong path, but no one seems interested in getting us back on the right path. The danger that we've got now is that the downgrade, as sort of unsurprising as it was, has served as a reminder to the bond market that something's wrong here. And so we've seen bond yields start to go up in the US. On Wednesday night in the US, there was a bond auction. That's when America, sells bonds to raise money so it can spend it. Now, the auction didn't go well. The demand was soft. And what that means is we saw the lenders, so the people who buy the bonds, say, sorry, America, we're going to charge you a little bit more. We're going to charge you a higher yield to lend you this money. And that's basically what we see when we see soft demand at one of these bond auctions. And so this pressure from the bond market is just going to continue to roll through. We had a question come through on our from the Chanticleer widget on the Chanticleer stories from Steve Noble, who points us back to Warren Buffett at the Berkshire Hathaway meeting.
Oh, hi, Chooks. At the recent Berkshire Hathaway meeting, Warren Buffett said, "Fiscal policy is what scares me in the United States. We're operating a fiscal deficit now that is unsustainable over a very long period of time. We don't know whether that means 2 years or 20 years, but it's something that cannot go on forever." He also indicated that he wasn't in favour of higher tariffs, as tariffs can be an act of war, and the United States should be looking to trade with the rest of the world. He wants a prosperous world. And this got me thinking how investing at the moment is just so very tricky, and I suspect that's why Buffett has so much in cash. The market is still expensive, considering the risks. What are your thoughts?
Steve's nailed it, and Warren Buffett's nailed it. What the bond market's saying is, that's right, this can't go on forever. When's someone going to have a crack at fixing it? How does it link back to what's happening in Australia? Well, our sort of bonds guru, John Shapiro, has been writing about that. You've got this big disconnect. The RBA is cutting interest rates while the rest of the world is putting up the price of long-term money. Will that sort of start to balance itself out over some period? And will there be upwards pressure on Australian rates more generally? Possibly, But this is all sort of going to this point about something's changed. The environment's changed. Feels to me, Anthony, like a bit of everything's changing all at once. Maybe it's always like that, but it does feel like a bit of a moment of drama, doesn't it?
It does, James, but I still got up and ate my Weet-Bix this morning, as I like to remind you. So I don't think everything's completely changed, but the downgrade definitely reminds us that, look, this tariff problem might have been parked for the time being, and it's not as severe as what it could have been. However, the core thing that was supposed to fix, the US balance sheet, that problem is still there, all right? So if it's not going to be done by the tariffs, it's going to have to be done some other way. Otherwise, the US borrowing costs are going through the roof, its debt's going through the roof, and that's when there really could be sort of long-term implications.
Yeah, and what we don't want is for it to be done in a disorderly way, with a sudden flight from US assets, a sudden weakening of the US dollar. That's the danger here, and we're not at that point yet. Your Weet-Bix are safe for the moment, Anthony, I'm happy to say. But just watch it. Watch two things, I reckon. Watch the US bond yield, particularly that 10-year, and watch the US-Japan exchange rate. Japan is the biggest buyer of US bonds. If the US dollar starts weakening against the yen, you know that the Japanese aren't buying those bonds in the same volumes they were. So those are the two things to watch, I reckon.
Agreed, James.
Well, Anthony, for our second topic, let's look at the high stakes and unprecedented corporate barney taking place at Melbourne Airport. One of the airport's shareholders, the fund manager Dexus, was in the market seeking buyers for part of its stake and had lined up some of those buyers for a deal that was supposed to be signed a fortnight ago. However, to reel in the buyers, it is alleged to have shared confidential information about the airport and the airport's owner, which is a company called Australia Pacific Airports Corporation. Now, Dexus's fellow shareholders have ganged up to try and kick Dexus out of Melbourne Airport. Anthony, can we go back to the start on this one? So Dexus has got a 27% stake in APAC. That's the company that owns Melbourne Airport.
Yep.
You called this one of the most valuable investments in Australian infrastructure and Australian superannuation portfolios. Now, that is a seriously big call. How do you come to that conclusion?
Oh, James, I've been hearing about it for 15 or 20 years. Seriously, everyone in infrastructure talks about Australia Pacific Airport Corporation, APAC. They talk about Melbourne Airport and how good an investment has been. Melbourne Airport in particular, James, it was privatised in the mid-90s. The owners then are pretty much the owners now. The shareholders agreement was actually designed with an IPO in mind. So the plan back in the day was to list this on the share market like Sydney Airport. But James, it ended up just being too good in private hands. And as you've seen with Sydney Airport, it's now in private hands. It's actually gone Melbourne Airport's way in terms of how these things are best owned. So owning an airport, it's a bit of a racket. Like the airport itself, It's basically designed to be paid for by the users, the airlines. And by the airlines, I mean the people that fly on the airlines. Ultimately, we're the ones, like everything in life, that end up paying for it. James, so every few years, the airport owner and the airlines negotiate a per-price passenger charge. And they do it based on capital expenditure, cost of capital, acceptable return, all that stuff you get with these regulated assets. So at Melbourne Airport, for example, James, that's $31.50 for a departing international passenger, all right? That Qantas will pay the airport, $7.50 for a domestic departure per passenger. Then you have little like security charges and stuff on top. So the airport owners use that money to pay for the airport, right? To do the runways, keep it going and everything. And then they use the excess cash flow to basically build shopping centers and sell you stuff while you're at the airport. So they're building all that with the money from the passengers to sell the passengers stuff, which makes it just this great racket of an investment. And James, the thing that's so good about Melbourne Airport specifically is that it's big, all right? 1.8 million passengers a month, only just smaller than Sydney. It's that Sydney to Melbourne route, one of the busiest in the world. It's an absolute goldmine for the airport owners, the airlines. It doesn't really have any competition. I mean, have you been to Avalon Airport, James, recently?
Not for a long time.
Yeah. I mean, the population, as you know, is growing down there in Victoria. The number of international flights to and from Melbourne should be growing as well. The airport, no offense, James, it's pretty daggy.
Yep.
They've got some big expansion plans, new runway, redo the terminals, all that stuff. That costs money to do, but the way the agreements are designed is you actually get paid back for that with a bit of extra on top. So if you do have money to put into the airport, you actually make more money off it. So yeah, like I said, James, was privatised in the 90s, 50-year deal, 20 years left to go. These shareholders have sat on their stakes really tightly, not wanting to let any of it go.
So a cracking business, and I'm starting to understand why it costs $15 for a beer at the airport. Now, tell me though, Dexus went to the market to try and sell 9.7% of its holding. It's about a third of its holding, right?
Yep.
If this is such a cracking investment, why would it want to sell down?
Yeah, well, like I said, James, these things, they don't really trade that much, but Dexus is a fund manager and it has investors underneath it who give it the money that they want to cash out for whatever reason. You know, they might be on the other side of the world and they decided to tweak the dials and put more money into US tech or growth or whatever. So they just wanted a bit of money back. Now, in this case, it's one investor called InfraBridge. It's an offshore group. It doesn't really matter for the purpose of this story who they are. But Dexus can sell that 9.7% stake to some other investors and then keep sort of managing it, right? So Dexus will still be the big shareholder with the big sort of the name up in lights, the spots on the board. And for them, that's really important because they make money managing that stake, right? As a fund manager, the bigger that stake is that they manage, the more valuable it is, the more money they make. So funds management, James, we've spoken about this plenty of times. It's all about fees. Australia's superannuation system's great, but it's also created this funds management industry that's just a fight over fees. Anyway, late last year, Dexus went to market looking for buyers for that 9.7% stake. It designed the sale so that it would still retain control of those shares. It would just bring in new investors to own them underneath it. Kicks off an auction, takes bidders through due diligence, gets to the end of it just recently. Yeah. And that's when the poo hit the fan.
So why did the poo hit the fan though? I mean, it all sounds pretty straightforward. Everybody in this thing knows they're on a sweet deal. They're all, cheersing each other with their $15 beers at the Daggy airport. Why do they turn on each other?
There's room in the shareholders agreement for transactions like this. The war, though, and it's really quite a drastic one, heated one. It's about whether Dexus inappropriately gave confidential information to the potential buyers as part of the due diligence process.
Right.
Now, Dexus has definitely handed over information. You have to. If you're going to sell $1 billion plus stake in an airport, you're obviously going to be handing over information to the buyers. No one disputes that. But was it allowed to?
Right.
So Apex, that's the airport, and its shareholders say absolutely bloody not. Dexus says absolutely yes. So they've gone to court. Now, APAC, so this thing went nuclear last week, James. APAC was trying to kick Dexus out in full. So not just the 9.7% stake that it was trying to sell, the whole thing, whole 27%, biggest shareholder, $4 billion worth, see you later. They kicked off this process that could have seen those shares disappear from Dexus's control, in 4 weeks, 6 weeks, which is really quite surprising and drastic. And we don't normally see these things. Now, Dexus did what it had to do. It ran straight to court, got it injuncted this week, and the case is due to be heard in August. And it's going to be fascinating on a few levels. Like, on one level, Dexus, it's an asset manager listed on the ASX, worth billions. It's a property company at heart. It's recently got into infrastructure, got this APAC stake when it bought AMP's old infrastructure business. It's effectively at war with APAC shareholders. Now, that includes the Future Fund, includes New South Wales' T Corp.
Oof.
It includes IFM Investors, which is owned by 20-something industry super funds. So basically, it's Dexus versus the world of Australian capital. All right? So, so that's not where Dexus would ever want to be.
Can I ask a potentially dumb question, Anthony?
Yeah.
This is obviously, as we said, it's a ripper investment, right?
Yeah.
Dexus is going out to sell this 9.7% stake or part of their largest stake. I presume Dexus is talking, the airport up. They would have sold it for more than it was worth, right? And then everybody, the entire airport gets revalued. It goes from being, I'm plucking numbers here, but goes from being worth 150 billion to 155 billion. Isn't everyone going to be happy with that? Or is that, am I missing a wrinkle?
Well, did they, James? That's why we got to wait for the court case. We don't know what price they ended up getting those investors in. We don't know how that links into what Dexus has historically valued the airport stake at, what the other investors value the airport stake at. I reckon watch that space. I'm not sure. Right. I'm not sure Dexus got as much money off those new investors as maybe what it thought it would.
So I can see where this is going as clearly as the plane goes from Melbourne to Sydney. I can see where this is going. It's going to court. It's going to make a lot of lawyers very wealthy, isn't it? So will we have a full trial showdown, or how's it going to work?
Yeah, if everyone holds their nerve, it's going to go to court in August. James. And given what's at stake here, given for Dexus, I mean, I'm not overplaying it when I'm saying this is so important to that company. No, it could blow up its infrastructure strategy. And if it loses that, the whole thing could unravel. It's hugely, hugely important. Given the parties involved, I think this Barney really will be played out all the way to the end. But James, remember, as we're saying, the guts of this comes back to confidential information, right? In a private markets deal. ASIC has been talking about looking at private markets deals, looking at confidential information. You've spoken to ASIC about this a few times. Do you reckon that maybe we could see this ASIC crackdown on private markets deals could gain a bit more steam here?
Well, I think ASIC's been really trying to figure out what it does and doesn't know about these private deals and how they work. It's sort of standing on the outside looking in. You know, they suspect that there's concerns about confidential information. They've been maybe given a few nudges in that direction. But yeah, I think this could be a test case, couldn't it, Anthony? This could really allow a few layers of the onion to be peeled back. And I'd imagine ASIC would be as interested as anyone in the Australian market in how this plays out. If it does get to trial, we're going to get to see how the sausage is made in this deal. What did Dexus say to who? What did the other shareholders say to Dexus? How was the information governed? How was it looked after? What is and isn't public? What is and isn't confidential? How do you define that sort of thing? So this could be hugely helpful for ASIC. They're going to potentially, this goes in front of a judge and the court will sort of give us some rulings on what is, what isn't confidential, what does and doesn't matter. Where does the rubber hit the road on these things? So yeah, you're absolutely right. For ASIC, this is a sort of perfect case study that they can now follow through the courts. And you can imagine they'll be poring over the documentation and all the media reporting and all the transcripts just as much as we will be in a couple of months potentially.
Yeah, and I think at the heart of it's going to be what was the confidential information, whose hands could it have got into that the other investors are so scared of? You know, we're talking the airlines. Remember that, like us back at the beginning, the airlines negotiate agreements about returns and passenger numbers and all that stuff all the time. Is it regulators or what? I mean, the APAC shareholders are clearly worried that someone out there was going to use this information against the interests of the airport.
Wow, it's got a whole lot of intrigue. Anthony, I can tell you are just itching for this to get to trial. You'll be sitting front and center in the courtroom. And I almost hope there's not going to be a settlement, because the juicy thing would be for the drama to play out before a judge somewhere, wouldn't it?
Absolutely. But like you said, James, it's the lawyers that will win.
Yeah, absolutely. Absolutely. All right, we'll be back after the break. We've got another couple of important data points next week, and one of our biggest companies is going to reveal its new strategy. Back in a sec. All right, welcome back. If you want to know more about what we're talking about today and a whole lot more, AFR subscribers can sign up to the Chanticleer newsletter at join.afr.com/Chanticleer. Every Saturday morning, the newsletter pulls together the best Chanticleer columns from the week and delivers them straight to your inbox. All right, Anthony, I am joining you in Sydney on Tuesday for Telstra's Investor Day. Telstra does these sort of big 5-year strategies. I think the last one's called T25. I'm presuming the next one's going to be called T30, but I don't know. But it's going to be CEO Vicky Brady's sort of big day out to sort of set the new direction for the company. Anthony, if I had to bet, I reckon there's 2 letters that we might hear a fair bit about on Tuesday. What do you reckon?
Hot tip, Control F, AI.
That's right. I think that'll be all through this strategy, and fair enough too. I mean, it's the big coming thing for Australia and the world. Wednesday, Anthony, we get monthly inflation numbers. Michelle Bullock didn't quite do the whole I'm on the deck of the aircraft carrier declaring victory over inflation, but she wasn't that far away from it. So I guess we'll get a bit of a look here. And then one thing, coming back to that bond market craziness, we've got a bunch of bond auctions in both the US and Japan. So these things usually just happen and nobody pays any attention. Next week, everyone will be paying attention to these things. I think it's going to be really important to see what demand's like, see how yields hold together. Could be a pretty exciting week there, I reckon.
Good one.
All right, well, we had our question earlier. We do love questions here at the Chanticleer podcast. Our question today was from Steve Noble. If you've got a question you want to send in, there's a few ways you can do it now. You can email us at chanticleer@afr.com. You can send us a question in audio form. Just record a voice memo on your phone, include your name and where you're from, and email us to us at that same address. And as Steve did, you can also ask a question through the widget on the Chanticleer articles at afr.com. We're getting lots of great questions. Keep them coming. We'll get to as many as we can. All right, Anthony, another big week. Keep your eyes peeled on those bond yields. Keep eating those wheat bix. And I'm not sure whether you should go to Melbourne Airport now. I don't know if you're welcome.
Oh, mate, I'm looking forward to the Telstra. I'm really excited now, next week.
Yeah, it's going to be great. We'll bring you all that next week. Have a great weekend. See you then. If you like the podcast and you want to hear more, consider sharing or giving the podcast a review, as it helps other listeners find us. And don't forget to follow wherever you get your podcasts. At the Financial Review, we investigate the big stories about markets, business and power. For more, go to afr.com and you can subscribe to the Financial Review, the daily habit of successful people, at afr.com/subscribe. Chanticleer was hosted by me, James Thompson, and Anthony McDonald, and it was produced by Alex Gow and Lap Van. Our theme is by Alex Gow, head of podcast is Lap Fan, and the head of premium content is Fiona Buffini.
The Australian Financial Review.